What's really behind Nigeria's Forex crisis? And why is it resorting to banning crypto? Will Nigeria's bold move pay off, or are we just witnessing the beginning of a financial freefall? And more importantly, who's next on the chopping block? Stay tuned to find out. Nigeria's latest move to restrict access to major cryptocurrency platforms has sparked intense debate. It highlights the regulatory challenges of digital assets in emerging economies. What factors drove Nigeria to impose this ban, and could it backfire by pushing crypto trading underground? In a shocking move, the Central Bank of Nigeria, CBN, has directed all banks and other financial institutions to close the accounts of cryptocurrency exchanges and crypto-related businesses. This directive comes amid a forex crisis in Nigeria that has seen the naira lose significant value against major currencies like the US dollar. The CBN justified the ban by stating that cryptocurrencies promote illegal activities and are used for money laundering. However, many experts believe the real motive is to prevent capital flight and preserve the country's dwindling foreign reserves. Nigeria is heavily reliant on oil exports, and the crash in oil prices has severely impacted its forex earnings. In February 2024, Nigeria's telecom regulator ordered local internet service providers to block access to prominent cryptocurrency exchanges like Binance. This extends the central bank's renewed campaign against crypto trading in the country. The crackdown aims to protect the naira amid heavy foreign exchange volatility, but it marks a U-turn from Nigeria's stance in late 2023 when the central bank eased an earlier blanket ban on crypto transactions. Nigeria had become a global center of cryptocurrency adoption, driven by factors like high inflation, currency devaluation, and expanding tech talent. The latest restrictions could hamper innovation, drive trading underground, and cut remittances. How did Nigeria impose first crypto ban in 2021? In February 2021, the Central Bank of Nigeria, CBN, directed banks to close accounts transacting in crypto and barred them from facilitating crypto exchanges. The CBN worried crypto's anonymity could enable criminal activity and undermine anti-money laundering efforts. It also cited exchange rate risks and wanted to preserve the naira's value. Despite the ban, Nigerians continued peer-to-peer crypto trading using alternatives like gift cards. The country became a hotspot for crypto, with ownership rates among the highest worldwide. Why did Nigerians embrace cryptocurrencies despite initial ban? High inflation averaging over 15% weakened trust in the naira. Strict foreign exchange controls also made it difficult to obtain dollars. This led people to use crypto as a store of value and for international payments. Remittances from the Nigerian diaspora also flowed through crypto as an alternative remittance channel. About a third of Nigerians reported owning or using crypto as of 2021. Nigeria has a young, tech-savvy population. Speculative interest surged as Bitcoin rose from under $10,000 in 2020 to nearly $70,000 in 2021. Peer-to-peer trading allowed crypto adoption to grow despite the banking ban. What are the main economic challenges facing Nigeria currently? Africa's largest economy has been hit hard by the crash in oil prices since mid-2014. Lower oil revenue depleted Nigeria's foreign reserves even as imports remained high. Nigeria also has a massive youth population and urgently needs to create 20–30 million new jobs over the next decade. But economic growth has been sluggish at around 2–3% annually. Double-digit inflation has persisted, worsened by FX shortages. The Russia-Ukraine conflict and rising interest rates worldwide strengthened the dollar and accelerated capital outflows from emerging markets like Nigeria. What policy changes led Nigeria to reconsider its crypto ban in 2023? By late 2023, Nigerian authorities realized an outright ban was impractical as crypto trading continued through informal channels. So instead, they chose to regulate crypto assets to reduce risks. In December 2023, the central bank introduced a licensing regime for digital asset institutions. Providing regulatory clarity was seen as a more pragmatic approach to prevent potential dangers like money laundering and terrorist financing. It would also allow innovation in blockchain technology and financial inclusion to continue. The 2023 move opened the door for crypto companies to operate legally in Africa's biggest economy. Why did Nigeria subsequently block access to major crypto exchanges in 2024? In early 2024, Nigeria slipped into a full-blown FX crisis as the central bank tightened controls to defend the naira. It banned dollar sales to bureau de changes and froze some Forex companies' accounts to curb speculation. But black market exchange rates continued to fall, signaling markets expected further devaluation. There was widening arbitrage between official and parallel rates. In this context, the central bank worried some unlicensed crypto exchanges were being used for speculative currency trading, worsening FX volatility. So it moved to restrict access and curb this activity. How has the crypto community responded to Nigeria's changing regulatory stance? The 2021 ban was a major disappointment after hopes of Nigeria embracing crypto. But the 2023 regulations were welcomed as a positive step, bringing clarity. The latest move in 2024 to block access has again shaken confidence in Nigeria as a destination for crypto investment. It creates more uncertainty after earlier policy flip-flops. Industry players argue Nigeria should be fostering digital infrastructure and financial inclusion rather than imposing arbitrary bans. There are concerns the ban could drive youth towards risky, informal crypto markets. What are the main criticisms and concerns about the latest crypto crackdown? Experts argue the ban is unlikely to solve the naira's problems, given broader macroeconomic conditions like lower oil revenue and dollar strength. Trying to control exchange rates through coercive bans could end up encouraging illicit trading channels. It may also undermine remittance inflows from Nigerians abroad. There are worries it will drive crypto trading further underground to decentralized platforms, cutting off regulatory oversight. This could facilitate more illegal activity, the opposite of the central bank's goal. The action could hurt Nigeria's tech sector competitiveness if young talent opts to emigrate. Critics say the government should be collaborating with crypto leaders rather than arbitrarily banning major platforms. Nigeria faces difficult trade-offs managing crypto innovation versus risks, but experience shows outright bans are ineffective, while thoughtful regulation can unlock economic potential. The central bank needs more nuanced policies that don't stifle Nigeria's digitally savvy youth. Could the crypto ban stem remittance inflows and hurt Nigerians dependent on them? Yes, remittances are a major source of foreign capital for Nigeria. Nigerians abroad sent home over $20 billion in 2021, much of it increasingly through crypto channels. If informal crypto remittance channels are shut down, it could significantly reduce flows. This would deprive many Nigerian families of vital income support. That's a wrap, folks. We've delved into Nigeria's latest bombshell move in the crypto world. Now, as the dust settles, one question lingers. Where does Nigeria's financial future stand? Remember to smash that like button if you found this video eye-opening, and hit subscribe for more mind-boggling updates. Let's keep the conversation going in the comments below.